Hello and welcome. We are thrilled to have you join us for another part of our Game Changers webinar series. Lannick presents 2018 Compensation Outlook and Hiring Trends, and brought to you by CPA Ontario's Career Services. Our guest speaker today is Kevin Giwan, Vice President of Permanent and Search Services at Lannick. In this webinar, you will learn which roles you can expect for pay increases, in-demand skill sets for 2018, economic factors impacting the finance and accounting sector, how to secure your next rewarding career opportunity. I'd just like to take a moment to run through some housekeeping items. You can find a PDF copy of today's slide deck in the handout section of the webinar toolbox. Please note that CPD credits will be awarded based on participation of the live sessions, and you will receive an email confirming CPD credits awarded within 3 to 5 business days. This webinar is your opportunity to ask questions related to our presentation today, and we encourage you to type your questions that you'd like to ask our speaker using the chat feature located on your control panel. We'll take some time to answer as many as we can at the end of our session today. If we're unable to get to your question during the session, please email careerservices@cpaontario.ca and we can ensure that all queries are answered. Stay tuned after the Q&A session, as we'll be sharing some information on some upcoming events for CPA Ontario members and students. Thank you, and please welcome Kevin.
Thank you very much, and glad to be back here in 2017. Many of you probably know we did one last year in 2016, and this will be a great session in terms of a continuation to bridge the gap between hiring trends for 2017 and 2018. So again, thank you very much for having me. So we're here to talk about compensation, the compensation outlook for 2018, and also what we're seeing in hiring trends. And hopefully hiring managers on the call and job seekers would be able to take away a couple nuggets to really enhance either the way that you hire and go to market to attain talent in the marketplace, or as a job seeker to really enhance the way you go to market and be a bit more savvy to really get you that edge in terms of securing your next opportunity. Special thanks to our clients and candidates on the call, and also my colleagues that are listening to this broadcast from our offices on King Street West. Without further ado, I'll walk you through just a little bit about my background. So I'm a CPA by background. I've had a few different roles over my career, some in accounting and some not. One of my last roles before coming to Lannick was Dyson Canada, and I actually ran the sales team there. So just shows you how your CPA can be used in many different instances, in many different roles, and really opens up opportunities and doors for you. So my current job here at Lannick is I run the permanent search practice here at Lannick, and actually being a CPA is not that uncommon in our office. The folks on my team are actually comprised of about 80% CPAs, so it really helps us in terms of engaging at a real technical level and an in-depth level with both our hiring managers and job seekers, and really adds credibility to our process, which is part of our secret sauce to serve the market. So I'll take you through what you expect to learn from this session, really as learning outcomes, which roles will enjoy pay increases, in-demand skill sets in 2018, economic factors impacting the finance and accounting sector, and really something that we're passionate about, which is the Toronto specifically hiring market and trends. So just a little bit about Lannick. I'm sure many of you know who we are, but just as a quick reminder, and hopefully you take away something new from this to be able to enhance your understanding of what we do and how we go to market. So Lannick is Canada's largest specialized regional staffing and recruitment firm. We do utilize a proprietary, unique, dedicated service model, which ensures a bias-free service to both our hiring managers and candidates, meaning we have a dedicated sales team and a dedicated recruitment team that would assist hiring managers and assist job seekers. The division that I work in is Lannick Finance and Accounting, where I run our permanent practice, Also, I have two colleagues that run our contract division. So if you're a designated professional looking for opportunities on an interim or contract basis, we're happy to assist you with that as well. And our clients, if you're looking for opportunities to bring folks in to run projects or manage interim work through year end, we're happy to assist with that as well. Our ProCount staffing brand, this is one of our younger brands. And many of you may not know, but we compete head to head with account temps here. But we use our dedicated service model to enhance the level of service for our temp offering in the marketplace, meaning deriving a high level of satisfaction from a candidate perspective and the hiring manager perspective, and ensuring that we have a really strong fit. We also have a brand called Lannick Technology, which services technology needs in the marketplace, which is a smaller part of our business, about 10% of our revenue, but growing quite rapidly. So some really exciting news, and just as a heads up, so we've been purchased by a large staffing company in the U.S., which is Nashville headquartered, called Vaco. Vaco is a big player in the U.S. in terms of financial and IT staffing. And we were purchased in the transaction closed in July of this year. So if you see any sort of information floating around in the Toronto marketplace about Vaco, it's not a new company. It's really Lannick transformed into Vaco, which would be which would be essentially our brand name in the future. And we'll keep you posted on that. Lannick is Vaco's largest acquisition to date. So really, Vaco's making a massive investment in the Canadian market space, specifically in the GTA. We will continue to offer our clients and candidates a best service possible within the GTA, but also expanding into different geographies over time. So again, it's going to be Vaco Canada going forward. However, we want to ensure that you guys know Vaco and Lannick equals the same. Just to give you some context, Vaco will exit this year at about $460 million US dollars, and that includes Lannick's estimated exit of 40 million Canadian dollars, just to give you some context. So we'll get into the meat of the presentation now. And first of all, we'll talk about trends impacting the market. So we really wanted to start at a macro level, having you understand, not many people on the call know that the staffing industry globally is actually growing quite rapidly. So faster than most countries' GDPs. So if you look at the global staffing industry, it's been growing between 5 and 6% for the last 2 or 3 years, and expected to grow about the same in 2018. And what that means is, it really means that companies are utilizing global staffing firms to locate and to pipeline strong job seekers that they may not actually find on their own. So specifically in the Canadian industry, what we're seeing is a pretty stable market. 2016 was 8.6 billion. Previously 8.5 in 2015, and forecasted to do 8.9 billion in 2017. So relatively stable, probably growing as fast as our GDP in Canada. However, what we're seeing is we can share with you our growth rate, which we're a niche specialized recruitment firm, and we're seeing, because of specialized skill sets being in demand and relatively low production of these way faster, they just cannot find specialized skill sets on their own, and they usually try to find them on their own. And what happens is we usually get a call with, I need this specialized skill set yesterday. So that's what we do. We proactively recruit to be able to service our hiring managers and companies that way. So we're not compromising quality by doing all our proactive recruitment, and we're fast, as well as we find the best fit possible. So what we can expect further is to see further tightening labor markets. Last year, I talked about me being in the business for 6 years, and it was one of the tightest labor markets I've seen, and that trend continues. So I've been in the business for almost 7 years now, and the labor markets continue to be extremely tight. Employment is actually on the rise, meaning in the third quarter 2017, we added in the province about 60,000 jobs, about 22,000 of those being full-time jobs, and about 38,000 being part-time gains in employment. And again, a really staggering figure here is since the global financial crisis, unemployment's been the lowest since then. So really, the economy is making a full recovery, and the labor markets are very healthy. Also, we can expect to see the complex Canadian legislative environment pose some challenges to the labor markets, including some of the tax changes that are proposed by the Liberal government recently, which may impact small businesses. Employers are focusing on productivity. We've seen a lot of productivity changes through technology, and global firms are starting to bring work back into Canada. We've seen a few companies do that, where you're finding that global costs of outsourcing has increased significantly, and the quality of work is not up to par, and companies are actually making a conscious decision to bring work back into Canada and actually have work in-house versus outsourced. We've also seen Canadian pension plans make a huge splash internationally, which is fantastic. As a Canadian, we feel very proud of that, where our pension funds are actually buying assets globally, and it's creating real demand from a finance and accounting perspective, trying to understand how to account for some of those asset acquisitions. Also, another really hot topic in the marketplace is changing demographics. We're starting to see many senior level finance individuals come to retirement. So many of them baby boomers exiting the market, and that's creating a real gap within the marketplace and really a leadership gap. So something, if you're a hiring manager on the call, succession planning is a huge topic, and it's real. And it's going to impact companies in potentially a very, very tough way if you're not prepared for it. And having a deliberate hiring strategy where you can systematically build your own internal talent pool really helps. So, if you're a hiring manager, or if you are plugged into HR somehow, a talent map is really important to start getting, and we expect to be speaking about this in the future. All right, so some of my favorite topics here: salaries and compensation. So nationally, we expect to see some of the lowest wage increase in 20 years, and really that has to do with economies not growing as fast as they used to. Slow growth is the new norm. 2017 salary increases in Canada specifically increased by 2.2%. In 2018, salaries are projected to rise by about the same, 2.3%. The good news story in that, and these are just averages, these are not finance and accounting specific, but the good news is that inflation is rising by 1%. So Canadians are actually the recipient of real wage growth, where some of the other G7 countries, inflation is growing faster than actual wages. So we're still fortunate in some ways. Projected salary increases in Ontario specifically are about 2.5%. The Lannick salary report, which we'll run through, it predicts about 2.2% increase in finance and accounting professionals in the GTA. That's across the board. Highly skilled professionals will continue to be in extremely high demand and yield above average starting salaries and other incentives. So if you are in one of the in-demand skill sets we're about to highlight, you would expect to earn over 2.2%. Another really interesting slide here, if you are in public accounting and contemplating a move, you may want to just pay attention to this slide, or if you are in one of these industries and want to see how you compare to other industries, it's actually really useful information. So as an example, this is again general. This is not finance and accounting specific, but is indicative of which industries are actually paying paying high salaries on a year-over-year basis. So if you look at pharmaceuticals as an example, about they will be paying on average just under 2.75. If you are in the energy sector, there's no secret that the energy sector and the oil patch in Canada, it specifically has been really hurt through lowering commodity prices. I recently met with a senior executive who used to work in Alberta, and he mentioned a lot of his colleagues that are back in Alberta are actually, if you are moving jobs, you're expecting to take less money. So you're really focusing on growth opportunity potentially, and actually benefits are a lot less. So that seems to be the new norm in the energy sector. So if you're considering the energy sector and entering the energy sector, it's something to contemplate for sure. The Lannick 2018 salary reports, what can you expect to see in them? So and what are some of the basics? Salary increases increase greater to proximity at downtown Toronto, meaning if you are a senior financial analyst in Hamilton or a senior financial analyst in downtown Toronto, you can expect to see some indexing for the Toronto job to compensate for cost of living within the city. CPA designations assumed for positions which are over 60K in our reports. Compensation varies widely as a function of seniority, industry sector, as we saw from the previous slide, and then risk reward factors and company size as well. Our data is based on actual placements, the market intelligence that we receive, and economic factors. Just to give you some context, we speak to about 35,000 people each year, do 35,000 phone screens where we receive information from individuals looking for new opportunities. That actually converts into meeting 10,000 people. And we also place about 100 people each year. So that's actual data that we pull from that. So what you can see is gradual salary growth across all roles and levels for CPAs. Compensation priorities for CPAs tend to be different at various levels. So if you're a manager, salary will be important. Also, managers tend to be further on in their life, potentially having a family. So flexible work practices tend to be part of a significant part of what you might be looking for. Productivity as well. So having better systems and processes tend to be pretty significant. Up and comers, folks that are up and coming in their career, recent CPAs are looking for salary. Also, a large component of what we find up and comers are looking for is career progression. So when we actually do receive requirements from our hiring managers, we talk about career progression with the hiring managers as a selling key feature in taking a job to market. Health benefits and wellness is a big one as well. What we find is that companies are becoming really smart with offering some key benefits to employees, which may not be financial in nature. As you look at the previous slides where there's an average 2.2% growth, employers are getting really smart in terms of offering non-financial incentives. Again, maybe working from home 1 day a week or having flex hours. Again, it's not widely practiced now, but it's something that you may want to consider with onboarding new professionals in 2018. Also, our bonus projections for accountants are between 5 and 10% of base salary. A manager is between 15 and 20%, and a director and a VP is between 25 to 40%. As you can see, it tends to go up over time, and the reason it tends to go up over time and with title is that when you're an accountant, you are being hired for your technical expertise, which we'll get into a bit later in terms of transferable skills. But once you start getting into a management role, you're now overseeing other individuals' work, and basically you are coaching, mentoring, and developing, and you get compensated for that because that adds real value to businesses. And at a director and VP level, you're probably in charge of strategy and managing a large team, which their production within the accounting department can add a lot of value to shareholders. And also, as a VP and a director, you're probably selling your services too, even if you're in finance. So this slide here shows a snapshot of our salary guide, and it's not all encompassing. If you would like a copy of it, please go to lannickgroup.com/salary reports, and you can download the full report and review it at your leisure. And I'll talk about some of the segments that are increasing over the average. So tax has been a big driving component of our job board in 2017, and continues to the census that continues to grow in 2018. Companies are bringing more, and some of the reasons are companies are bringing more tax work in-house versus outsourcing it to the big four firms. A, it's cheaper, and then B, you get better consistency and more institutional knowledge with those individuals actually working in the company. So from a cost savings perspective and a quality of work and continuity, it tends to be better. Only a small percentage of CPA graduates tend to move into tax. So by definition, it tends to be a small pool of candidates in any case. Out of 1,000 new candidates every single year coming out of the CPA in Ontario, maybe 2% of individuals may choose to specialize in tax, so a very specialized area. In any given senior level tax job, as an example, we had a client come to us recently to find a director of tax, and that client was looking for someone specifically with tax to do with cross-border flows of funds. So specialized tax roles are almost like being a pediatric allergist in some cases. It's so specialized, and only a handful of people within the GTA can do a specific job to a specific requirement. And what that does is it creates a real tug of war between for tax leadership roles in particular within companies in the GTA. So if you are a hiring manager looking for tax roles, or if you're a job seeker looking for tax roles, it's a great time. It poses some challenges if you are a hiring manager, but if you look at some of the key incentives and understand how to go to market, you can have a lot of success. And please phone us if you have any questions. Also, an increasingly complexity due to tax changes will continue to drive demand in 2018. Managers of financial reporting, again, would increase over our average. What we're seeing here is since we're seeing some changes within IFRS. These are the most changes that we've seen since IFRS has been adopted in Canada. So there are lots of changes that we've worked with our clients with beginning of late last year, beginning of this year, which took place in 2017. And we're starting to work with some of our clients on some of those changes for 2018 and beyond. So as an example, IFRS 16 is one of those changes, and we've received a lot of demand, and therefore it posed some challenges in the labor market. In addition to that, a lot of new CPA graduates actually want to move into different types of roles than reporting. It tends to be similar to tax, where not many candidates want to do reporting because that's what you've done and that's what you specialized in. But many people want to move into different areas, so therefore leaving only a small pool of candidates to be able to choose from, and therefore, again, creating a bit of tug of war within the labor market within reporting. Also, we're seeing a lot more activity from private equity firms, because many private equity firms have debt covenants on their balance sheet. They're required by whomever they're borrowing from, whether it's a big four institution outside of that, to report under IFRS. So therefore creating demand, not only if you're a public company, but also in the private sector. Also, we're seeing the finance manager, as an example, would be probably our most highest velocity role in terms of receiving requirements from our hiring managers and actually getting job seekers into those jobs. We see this in finance manager in pretty much every department, whether you're a large company or a small company. Every company tends to have at least one finance manager, and the general growth in the GTA of our business, new companies in the GTA is actually spurring this growth on, and also the demographic shift is playing into this too, because if you think of it, where do you find qualified candidates in your company to be able to take that director of finance role if your director of finance is leaving due to retirement? It's usually giving that finance manager an opportunity to step up into that role. So that creates some gaps and some vacancies in the market. The other one is director of finance. Companies are paying more for CPAs who have strong technical and leadership skills. Again, this is not only a technical job; you have to have the technical chops to be able to be a director of finance, because that's how you were probably brought into the company for your specific skills. But also you're running a department here, and leadership skills are very important for coaching, mentoring, and development of staff to have a very functional team. Also, I mentioned before, boomers. We've seen many retirements this year, so boomers are exiting the workforce. Many of these individuals are either directors of finance or VPs of finance or head of tax roles, and this is actually creating a lot of gaps in the marketplace. Hard to fill roles due to experience gaps with candidates one layer below. Actually, in junior staff that lack level of tenure and strategic skills required to be successful in the director of finance role. So that's actually creating a lot of push and pull in the market. So what we're seeing is companies actually starting to invest in other staff at a lower level and coaching and developing to get to that level of the director of finance. This slide here is really representative. This is our data, and I would think other staffing firms will probably look like this too. If you look at the data here, a lot of hiring happens between spring and towards the end of the year. From June to September tends to be a lower velocity of hiring. And if you're a hiring manager on the phone, you probably want to think about, instead of hiring in October or November or December, maybe be a little bit more strategic and proactive and say, I'm gonna speak to I'm gonna post my job in June or July where there's not that many other companies looking for talent, where I might actually get better choice in the marketplace. And also, if you are a job seeker, you want to consider looking throughout the year, because there may be clients looking in June, July, and August that are presenting great opportunities for employment, but also keeping in mind that the actual markets tend to rally within the spring and before the end of the year, between October and December. Companies tend to hire to acquire expertise. In our experience, when we get specific requirements from our clients, it's usually for, I need somebody with IFRS 16, or I need somebody who knows VBA macros that can come in and add value immediately. There is usually a gap in the company that needs to be filled immediately. So, many candidates we meet come in and say, well, I'm in tax now, but I have transferable skills. That may be true, but when companies actually come to market, they're looking for specialized skills. So we want you to really understand that, and as you get into a company for your specialized skills, maybe at that point in time, by working on projects and being the resident expert within your field, you get to know other people within the business, and that tends to add to transferable skills over time. John Corfield, my colleague, talked about the Lannick Value Tracker. That's a free download on our site, and it's a fantastic one. If you take a look at it, and it really sort of crystallizes what's your value proposition to the employer. So you may want to take a look at that. You will also, will also mainly be focused on roles that you're actually qualified for and directly applicable to what you're doing, and the skills you currently possess. So focus on those, and then that will get you into potentially the company that you want to get into. So the GTA again is a robust market with strong increase for CPAs. We will run you through what some of those technical skill sets are: software skills, project skills, and soft skills, which is a key component into moving into management roles. Financial modeling is one of the key skill sets that we're seeing as CPAs continue to redefine their roles. As CPAs continue to redefine their roles as report generators, what we're seeing is that we're becoming more business advisors. So through financial modeling, we tend to work with many aspects of the business. And what we're seeing is that we're seeing accountants work in not only in a financial function through their modeling skills, but it may be in the sales teams, as an example, driving margins, understanding customer P&Ls, working with the sales teams, or even working with customer service centers, driving KPIs, etc. So we're seeing CPAs adding value in many different areas that we never seen before, and that continues to be a trend. So technical accounting and reporting or memo writing, again, we've seen a lot more demand for that in 2018 because of some of the changes, recent changes in IFRS and changes to come. So essentially, we're seeing a lot of companies coming to us and saying, do you have anyone with IFRS 16 or 15? Because these changes are coming, and essentially what someone will do in this role is they'll understand the changes in IFRS and bridge the gap between what's happening in the business and being able to write a memo and articulate the point in which the company is taking within the framework of the standard. So that takes a lot of written communication skills, research skills, and writing skills to be able to translate, understand, and sell the message. And a lot of this is being done to ensure that you're on side with your accounting firm, your Big Four accounting firm, or another accounting firm, perhaps Big Six, to ensure that you are on the right side of the pronouncements. Some of the trending skills, again, we're seeing in demand are IFRS 9, effective in January 2018, IFRS 15, in 2018 as well. We actually worked with clients already on some of these and continue to work with them. These will be effective pretty soon. So we started working with clients last year on some of these requirements, and we're starting to work with clients now on some of the January 2019 deadlines for IFRS 16, and we haven't seen a lot on 17 yet, but that will come. So if you're a hiring manager on the phone and you're struggling to find resources for 16, we'll gladly take your call and help you. And if you are a job seeker with that skill, again, we can help match you up with those hiring managers within the GTA. So trending skills, again, for 2018, so taxes continues to be a hot topic. Canadian domestic corporate tax is becoming a little bit more complex due to some of the pronouncements and changes. Canadian corporations are facing overwhelming scrutiny in the areas of tax compliance, and sound planning is always very important. Personal tax planning, with recent tax changes, will pose some strain on tax resources in 2018, and so we're going to see a lot more changes in tax to come. So software skills, as we find many companies looking for improvements in efficiencies, a lot of them are synonymous with implementing a new software as an example. So if you are one of these individuals that have strong technical skills, or you may want, if you're seeking to do some sort of technical pursuit in terms of systems, SQL access and database management systems are being highly used, and hiring managers are seeking these skills, being able to convert increasing amounts of volumes of data from data into information where you can make good, sound business decisions. Business intelligence tools, again, big data is a massive topic these days, and most companies we deal with are looking to get those nuggets of information from their systems to be able to drive more sales, better margins, and more shareholder value through business intelligence tools. So SAS is one of them. SAP Business Intelligence, Tableau, Oracle BI Enterprise, and Microsoft BI tools are widely used by accountants now because because of efficiencies, and being able to use these tools and be hands-on really puts you on the map within organizations and gets you really well known as well within the organization as the resident expert on these tools. Also, Microsoft Excel, being an advanced user of Microsoft Excel, really, to be honest, it's almost table stakes these days. If you are a newly minted CPA, you're almost expected to be strong in Excel, because the entry level in most finance departments, you're putting together reports and presenting information on Excel to be able to not only make decisions, but to be able to present information in a great format, a understandable format to non-financial managers. So this is something you're almost expected to know, and it's a trending skill set in 2018. And if you are, just on those bits of software, you may want to make sure that you're up to date on those bits of software. And the topic that I mentioned before in terms of transferable skills, those software skills allow you to be the resident expert and get to know people within organizations, and then being able to build relationships in various departments may allow you to use your transferable skills at that point. So you got to build it up. In addition to technical and software skills, employers are seeking candidates who have demonstrated examples of cross-functional collaboration, process improvements, system implementations, and accounting standard conversions. So we're seeing a lot of demand for companies undergoing business transformations, whether it's a large existing company or companies that are small and looking to be very nimble and add a lot more to the bottom line. We're getting a lot of demand for folks that can speak to non-financial managers, translate financial information into lay terms, so business owners and business process owners can understand the information and make sound business decisions with a strong financial impact. Soft skills. So we meet many people through our offices, as I mentioned, and a lot of our newly minted CPAs often ask, how can I make the most money as an accountant? And I often say, you have to, obviously you're smart, you've gotten your CPA, you're technically sound, but soft skills are extremely important. It's all about selling at this point. So being able to communicate your value proposition, being able to communicate ideas, being able to influence the business, and being able to build relationships in a business are key and critical. And if you're a business leader, you're often the face of the company, and you're selling your whatever service or product your company has to offer as well. So being able to communicate your value proposition as a company is very, very key. And this goes beyond finance and accounting, and it goes for all leaders and anyone that wants to be a leader in the future. So making the most of your CPA designation. So if you're a newly designated CPA, first of all, congratulations to everyone that convocated recently. You must feel pretty relieved that all your exams are done and you have your CPA designation. It's a new world out there for you now. Seek a mentor. A mentor, doing your CPA, there's a framework for success, meaning you go through many layers of examinations and then you have to get um, your practical experience requirements to become a CPA. So when you leave that highly frameworked environment, you go out into the real world, which is not that frameworked. But having a mentor can help you build a framework of understanding, where do I want to be? Where do I want to go? And being able to model the masters. So find somebody that you want to be like and ask them to be a mentor. Don't be shy. If you don't ask, you would never get. So ask one or two individuals. It could be a family member. It could be people that you work with. It could be a partner at your firm. It could be it could be anybody, quite frankly, that you admire in some way or form or fashion. So, you know, to the new CPAs, do not rush your specialization. Just because you like something on an academic basis, you want to see what it's like in practical terms and application. You may like something from a practical standpoint you didn't love academically, and vice versa. So you want to be able to ensure that you can work in different rotations and understand what different jobs have to offer, because your career is a long one and you want to be able to invest the time and effort into something that you really truly like. I would say, again, register with a recruiter if you aren't actively looking for a job, because we get calls from hiring managers all the time of jobs that are not listed anywhere online. And if you are competing in cyberspace for many of those jobs on the job boards, you're just one of many. Where if you are registered with a recruiter, we can tell you what's happening in the marketplace. We can give you a sense of what jobs are great, what industries are great, what's not, and also access to jobs that may not be widely distributed online. Entering the Canadian job market is pretty daunting. Some of you may know, like I've been there myself. I moved from Trinidad just about 17 or 18 years ago, and I came here with an ACCA designation, and I was given very good advice. I'm going to give you good advice now. Register with CPA Ontario immediately, so Canadian hiring managers really understand where you're at in terms of a Canadian CPA, and it just helps add credibility and understanding as you go through interviewing processes. Um, and I'll give also the CPA has done a fantastic job in terms of reciprocity programs globally, and it makes it a lot easier for folks coming in now from many years ago when I first came in. Also, what I would encourage you to do is, if you're a new CPA to the Canadian job market, please consider contract opportunities, because that's essentially how I got my first job, which turned into a permanent job. But more than 50% of our jobs that are contract turn into permanent assignments, and is a great way to build your network and to start, immersing yourself into the Canadian work culture. And just a little bit of a twist to this story. Most of you may find your first permanent job through a contract job, which we can help with as well from our ProCan staffing business, as well as our Lannick contract business. But what we're seeing, just speaking about tight labor markets, we're actually seeing folks coming in from overseas now and getting jobs with big four public accounting firms, which I've never seen happen before. And it could be because of the good job that the CPA is doing in terms of reciprocity, as well as a convergence of standards, meaning IFRS. So that could be it as well. So we're seeing folks coming in and getting jobs with big four accounting firms straight from different countries. It is not the norm, but it is happening, and it just adds on to the point where it is a tight labor market. Okay, so the power of the designation. So hopefully this is one of the best career decisions you've ever made. Your designation will have profound impact on your income and the trajectory of your career. And again, the CPA tends to open up different doors than you might think. So don't think of finance and accounting only. I've had sales jobs in my career. I now run a recruitment practice. It can lead you into many different business areas, many different functional roles. So keep an open mind. When you get your designation, you can expect an increase between 10 and 15% after getting your designation. So really a nice bump and reward for all the hard work you've done. So congratulations on getting your designation. If you are highly skilled CPA in the market, there will always be demand for CPAs. Companies need to file their financial statements on time. Companies need to do their taxes. Individuals need to do their taxes. So you will always be. The good news is you'll always be in high demand, and you can seek diverse career opportunities. So that brings me to the end of our presentation, and we'd like to feel.
We're going to ask some questions. Great. So thank you so far. Our first question is, are you seeing a trend for professionals working beyond age 65? If so, does their compensation stay the same, decline, or rise?
Sorry, what was the question? I didn't hear the question.
You didn't hear that, sorry. Are you seeing a trend for professionals working beyond age 65? If so, does their compensation stay the same, decline, or rise?
That's a great question, and as we see a change in demographics, we're starting to see some individuals retire from full-time work and actually take contract work. So they're really being hired for their their skills and experience that they've earned over the years. So we're not seeing a significant decrease in any way, but it's a special place for individuals like that, right? So some of the people that we see take part-time work, right? So they may not want to continue working 5 days a week, but they do want to get out there. They do want to share what they know, and they do want to be able to interact and coach and mentor younger individuals and help them in their careers. So we don't really see, if you want to quantify it from an hourly standpoint, not a huge decrease in my view, but usually the folks that we see do not want to work 5 days a week and regular hours.
Okay, and on that note of contracts, what do you see for opportunities and compensation growth for contract employment in 2018?
It's a great question. So I think it really depends on demand and supply. Meaning, it is a tight labor market, and it really depends on your specialized skill set. So the more specialized your skill set, I would say the better you have of commanding, the same or a bit more in 2018 than you did in 17. And also, it really depends on the projects that clients or companies are looking to get done, right? So it really depends on the number of projects. But based on what we're seeing, it's a pretty healthy market, and I would say rates and wages will probably go up in that space as well.
Okay, great. Another question here. I've heard career growth and companies' culture are more influential to attract new recruits rather than compensation and benefits. Do you see that too?
Yeah, it's a great question. And actually, we're working with many startup clients now. And what we're seeing is that, if an employee is coming, a potential employee is coming to us and saying, hey, Kevin, well, I'm looking for 80,000, but what I would consider is that's for a regular job with, straight benefits, and that is more that is more common. But if it's a startup opportunity in an exciting field, I will actually consider less to be able to do that job with a lot more growth potential. So we're seeing the trade-off in compensation for potential and the satisfaction of work and culture, for sure.
Okay, great. And can you comment on other incentives? So what other incentives might include, and what about average starting vacation?
Average starting vacation for a CPA would be 3 weeks. I see in very small circumstances, it's 2. But then there's other compensating factors outside of that, right? So maybe there might be a shutdown of a plant or something for the 3rd week of vacation potentially. So there's always a compensating factor. And to answer your question, in terms of other incentives, what we're seeing is, some of the incentives, quite honestly, might be to be more involved in the strategy of the company. So just opportunity to learn and to add value. So it may not be a financial incentive really, but it's an incentive to get experience beyond what a traditional type company might have to offer. Some of the incentives may also be working from home 1 day a week, perhaps, right? And some of the other financial incentives we've seen is stock options too. So where we see, some of our clients on the TSX Venture, as an example, a big part of how they compensate their employees is based on, taking a risk with the company and receiving stock options. And in some cases, it pays off very well. In some cases, it doesn't. So, it's an inherent risk.
Okay, great. And that is all we have time for today in terms of questions. But if your question hasn't been answered, please feel free to email careerservices@cpaontario.ca, and we can pass them along to Lannick, and so that you can get those questions answered. So thank you for today, Kevin. Just quickly, I'd like to share some of CPA Ontario Career Services' new and exciting upcoming events. So firstly, we have the job board. It's our official job board and your direct link to top employers recruiting leading financial professionals. Whether actively or passively searching for a job, this is a really valuable resource to see who is hiring and what skills are in demand. So next, I'd just like to share our upcoming Game Changers webinar series. These are free Lannick Presents 2018 Compensation Outlook and Hiring Trends webinar today. We hope that you found this session informative, and please take a moment to complete our post-event feedback survey that will be sent via email tomorrow, along with a recording of today's session. On behalf of CPA Ontario, we'd just like to thank you for your time, and we hope that you have a great day.